I think the first thing to say about being a contrarian, of course, is you have to be pretty humble as a contrarian. You're often shown to be foolish if you're too aggressive. But nevertheless, the heart of being able to think independently is to look through the noise that surrounds us, the narratives that surround us, and think a little bit long term. And as we do that, actually we see some really good opportunities in China from a valuation perspective. There's some wonderful companies in China, particularly in the technology and communications space. They didn't benefit in the same way as the US tech stocks did over the last couple of years. And so now they're really good quality growth companies at very low valuation. So actually, we're excited about the opportunities in China for the first time in a very long time.
So at these levels, and I ask you that question, people may look at the news around China and think it's a disaster in market terms, but the reality is the MSCI China is up over 26% month to date here. So there is money chasing the Chinese story. That's a long way already in a month. Do you put more money in at this point, or do you wait for a valuation reset?
Well, it's a long way in a month. It's still quite a way off the high. Of course, when you have very large moves, as you know, percentages become a bit misleading. And so it's still a long way from where valuations were. We'd still see these stocks, that market, as underpriced. And so we're not adding to positions. We've already got positions in the market. I think the most important thing to remember is that when investing in China, although we can't predict the politics, we know that it's an environment where things can change, where the government has control, and so there has to be an expectation of a very low outcome from these stocks as well. So the capital amount that you put to work in China is incredibly important. So you can't be too bullish, you can't be too enthusiastic, but at these valuation levels, still well off the highs, it still looks like good value to us.
Why would I bother, Dan? Good morning to you. Why would I bother when there are so many other extraordinary opportunities around to add on the extra layer of political risk and regulatory change because of the politicians? You've got political risk domestically and what the government under Xi decides to do, plus trans-Pacific policy risk as well. Why would you even bother with China when there's so many opportunities globally?
Steve, that's a really good point. I'm just going to challenge the premise of the question, though, that actually as we look across the world, we don't see an enormous number of opportunities. Prices are lower than they were at the beginning of the year, of course, and we see that particularly in the US, but at the beginning of the year, we saw the US as being extremely overvalued. And so as prices have come back, we think US equities have got nearer to fair value. Europe still doesn't look particularly attractive outside Germany. And so there are still pockets of valuation, but it's not that situation that we've seen in previous big market moves where we think that the whole world is on sale and there's a wealth of opportunities. We'd still see a fairly narrow opportunity set in this market.
I mean, even look close to home, Dan, on your own turf. Threadneedle Street, or well, not Threadneedle Street, where the old stock market, what's the stock market these days? It's Paternoster Square these days, isn't it? Yeah. I mean, look, we're trading 11 times on the FTSE as well. Surely stuff like that looks cheap.
Well, the UK is the exception alongside Germany. You're right. So the UK is an attractively priced market, even though it's been one of the most resilient this year. But the thing to remember about the UK is the underlying market shape really is dominated by energy and financial companies and healthcare companies. And as you know, you haven't got that long-term growth exposure in the UK that you can have elsewhere. And so one of the attractions about China is you have these high quality, large technology stocks at very low valuation. So it's not just about the geography, it's about the sector and the industry makeup as well.